This question 6 was an ICA past question. That was April 2022 for capital reorganization question 6. Let's just read it and see if we have any issue somewhere or we have issues anywhere. Then we address it before we do what we want to do today. JM, help us read the question. JM, are you there?
Should I read it?
Yeah, okay, read it. Let's move on.
EGA Limited is a private limited liability company that has been operating in the agro processing industry over the years. The company, which was very successful over the years, is now facing trading difficulties. The most recent statement of financial position for the company is shown below. Statement of financial position as at 31st March 2021, non-current assets, land and building, 100 million, land and building 100 million, plant and machinery 362 million, development expenditure 15 million, goodwill 12 million, non-current asset inventory 235, receivables 95, ordinary share capital at 1 Ghana cedi 400, retained earnings 94, non-current liability 12% debenture, current liability with creditors, bank overdraft secured on fixed assets. The following additional information is provided. The company's activities have been rationalized and the loss-making department closed. The following scheme for financial reorganization has been drawn up. Intangible fixed assets shown be written off and the remaining assets restated at their market values. Land and building 161, plant and machinery 200, inventory 162, receivables 88. The ordinary share capital should be written down as necessary to enable assets and liabilities to be restated at realistic figures and to clear the debt balance on retained earnings accounts. A 12% debenture should be converted into 80 million ordinary shares at no par value to be issued at 1 Ghana cedis in full satisfaction of the amounts due. 4. The directors should subscribe for a further 200 million ordinary shares of 1 cedi each at par to provide the cash needed to complete the reorganization. The bank is to convert 200 million of overdrafts into a loan carrying interest at 14% per annum, repayable in 4 equal annual installments, commencing 31st December 2021, required. Calculate the amount to be written off the existing share capital. 2. Prepare a revised statement of financial position of EGA Limited as at 1st April 2021, taking into effect the proposed scheme for reorganization. 3. Provide assessments of the proposal for the future prospects of the company.
Right.
Thank you, sir. I'm done.
All right, you're welcome. Thank you, too. So this is a question. This is a question. Based on the additional information, can we do something about it? Can we all try it? If you see this question, can you try it? Can you try it? The first requirement is calculate the amount to be written off the existing share capital. How do we go about that? How do we calculate 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 that? Emmanuel, you are the one who has read this thing for us. How do we calculate that? Do you have any idea about it? Should we solve it?
Yes, please.
Okay.
Yeah.
Okay. So the first thing is, the first requirement is calculate the amount to be written off the existing what? Share capital. The way that you can do this is that you just go and prepare your capital reduction account. They haven't given you any amount that you should write off the ordinary share capital to. So just prepare your capital reduction account. Any balance on the credit side represent the amount of the share capital that you have to write off. So we are just going to prepare the capital reduction accounts. Any balance on the account to make the two sides to be equal becomes the existing share that we are going to write off, the portion of the existing share that we are going to write off. So let's have the capital reduction accounts. Capital reduction accounts. Capital reduction accounts. For the capital reduction accounts, let's come to the footnotes. Let's come to the footnote first. Okay. The first one is what? Intangible fixed assets should be written off, and the remaining assets restated at their market values. So they say we should write off the intangible what? Fixed assets. What are the intangible fixed assets over here? In the question, what are the intangible fixed assets? What are the intangible fixed assets?
Development expenditure.
And what?
And then
Goodwill.
And goodwill. So the first one that we are going, is that going to be an expense or a gain? It's an asset that we are writing off. So
Okay.
it will always be a loss. So
Okay.
are you okay now? If you are
Sure.
giving out your asset, it means that the money that you have used for it, you are not going to get anything from it. And also goodwill. Okay, goodwill figure is what?
12 million.
Okay. So let's count to the revalued assets now. Let's count to their figures. Okay, land and building is now 161, isn't it? How much was it first?
100.
Is it an increase or decrease?
It's increase.
That would be a gain or loss.
No. Gain is the one.
Okay. Land and building. Gain of what?
61.
61. Okay. Let's move on to the next one. The next one is plant and machinery.
Machinery.
What was the original value?
362.
So are we losing or we are gaining?
We are losing.
Okay.
200.
By how much? Plant and machinery.
162.
162. Okay. Is the difference between the new value and the old value? Let's count to the second one. Inventory. Inventory is 162 now. What was the inventory before?
235.
235. Are we losing or we are gaining?
We are losing.
So inventory. By how much?
73.
73. Okay. Let's move on to the next one. I hope you are all following, isn't it? All right. Receivables.
88.
Okay. Against what?
93.
So what is happening?
We are losing
Okay.
5.
We are losing 5. So receivables is 5. 5. Okay. Receivables is 5. Let's come here. Okay. So we are done with the first one. The next one is what? The ordinary share capital should be written down as necessary to enable assets and liabilities to be restated at realistic figures and to clear the debit balance on retained earnings accounts. So let's go and clear the debit balance on the retained earnings accounts. So where would the debit balance be? Is it going to be a gain or loss?
Oh,
A lot.
It's a loss, isn't it?
A lot. Yes.
Okay. It's a loss. So retained earnings is negative. That means that the shareholders are owing the company. And now they are not going to pay anything. So the company is going to lose. Okay. And that is how much? 94. Okay. 94. Let's come to.
Please, can you take the note 2 again?
Note 2. The question is saying that the ordinary share capital should be written down as necessary. They didn't give us any figure. So after preparing the capital reduction account, you will see that there will be a balance on the other side to make it equal. So that balance will present the what? The share capital. Okay. To enable assets and liabilities to be restated at realistic figures and to clear the debit balance on retained earnings accounts. So they are just saying that you have to write down the share capital account so that it will enable you to clear the retained earnings. You can't be making loss. Right now, if we are doing capital reorganization, we are coming as a new firm. So everything, every loss and those things will be cleared off and we start from zero. We start from scratch. So debit balance will not be sent to the new company now. We clear it off. But they are just saying that this should be written off or this should be written off against the share capital. But we don't know the share capital, so we go and just write off the retained earnings. Are you okay? All right.
Thank you.
The 12% debenture should be converted into 80 million ordinary shares at no par value to be issued at 1 cedi in full satisfaction of the amount was due. So we have some shares over there which we didn't attach any value to them. So if they say share at no par value, it means that these shares are shares that are just there. There's no value attached to them. So if you want to sell it, you can sell it at any amount that you want. So these are always the shares that were registered with the company. So if you go there, the Registrar General Department will just register some shares to you and they will not add any value to it. They are saying that, okay, you can sell these shares at any value you want. That is what we call shares at no par value. The company determines the share price itself. But if you have issue shares, those are the shares that are listed on the stock exchange market. There's a price attached to them. So if you want to sell it, you sell at that particular amount. So that's what they are saying. So these shares, we don't have any value attached to them, but we are now selling it to them at what? How much per share? We are selling it to them at how much per share?
1
cedi. So what will be the total value of the shares that we are giving to them?
80.
80 million. So we go and ask ourselves, how much are we owing them? How much are we owing them?
84.
We are owing them 80, isn't it?
80, okay.
So you can see that there will not be any gain, there will not be any loss, but they are just changing their debenture to what? Ordinary shares.
Ordinary shares.
That is all. They're just changing their debenture to ordinary shares. So this will increase the number of ordinary shares that we are going to have. Okay. Can we move on now? Okay. The director should subscribe for a further 200 million ordinary shares at par to provide the cash needed to complete the reorganization. So what will this transaction, how are we going to go about this transaction? It's between ordinary shares and what? Cash, isn't it? We are issuing additional 200 million shares to them at 1 cedi so that they will buy and pay cash to us. They will buy and pay cash. So this transaction is between ordinary shares and cash. Ordinary shares will increase and our cash will also increase. Since the question didn't ask us to prepare cash or bank account or ordinary shares account, don't go and don't bother yourself and be preparing those accounts. You can just go straight forward, add your ordinary shares, some small workings and go. If you're preparing that account, you are working within time. The question you didn't demand for that, but you can do some small workings for yourself. So what you have to know is that your cash will increase by 200 million because you are issuing additional shares, which people will buy and pay by cash. What will happen? The number of ordinary shares that you have will not increase. Okay. The bank is to convert 200 million of overdraft into a loan carrying interest at 14% per annum, repayable in 4 equal annual installments, commencing 31 December 2021. So the question is, what is the bank overdraft? What is the total bank overdraft over here? It's 247, isn't it?
247, yes.
And the bank is converting how much? How much are they converting?
200 million.
200 million. So how much would the company be owing the bank now?
47.
47. Okay. The company will be owing them 47 now, but 200 will now be a long-term debt. Okay. So these are the transactions that will go to the capital reduction account. This seems to be very simple, isn't it?
Yeah.
Hey. So these are the things that will go to the capital. So let's
Hello, please. I can
understand
only
what you're
see the question, but I can't see the board.
I'm not using board.
Okay.
Okay, but let me see what you are talking about. Hey, but the question seems to be very assembly.
very simple and short. You know.
That particular, if you know thing. And the university is just like a song to us. Some lecturers, they don't know the thing, but they will use that song as if you know, and come in so that you'll be laughing. And then they will go. Okay. Okay, I'm trying my best to share. Okay. Sorry. Okay, are we okay now? Can you see the development expenditure and those ones?
Yes, please.
Okay, so you are okay now, isn't it?
Yes, please.
All right, let's move on. So let's just total. Let's just total. So this side is 361. This side will be what? This side is what? 61, isn't it? So what is the difference? 361 against 61. What is the difference?
300.
That difference, what are we going to name it?
Plus.
That difference will be what? What will be the name that we give to that difference? That difference is the ordinary share that you're talking about. So the ordinary shares has to be written down by 300,000, 300 million. That's what they're saying. So 361. So it means that we are not going to have any goodwill or any gain, just that the difference between them will be the ordinary shares that we have to what? Write off. So you can see that the ordinary shares should be written down as necessary. So if the balance is on the credit side, it means that the shareholders have to forgo that portion of the ordinary share, which will be a gain to the company. Are we okay there? So this is what they are saying it should be. The ordinary shares to be written down by the 300 million. That is what they are saying. That is all. This is a capital reorganization account. All right. So the next one is, let's go to the bank. Let's go to the statement of financial position. Let's go to the statement of financial position. Statement of financial position. So we start with non-current assets. Current assets. Then we have the currency sign here. We also have the currency sign here. So the first non-current asset is what? The first non-current asset is what? Land and building.
And building.
Land and building. Okay. Land and building. What is the new price of the land and building now? The revalue amount is 161, isn't it?
Sure.
Okay. Let's look at the next one. Plant and what? Machinery. The new amount is 200. Okay. So we only take the new amount to the new financial statements now. Let's go and see whether we have certain non-current. Okay, GM. GM, your hand is up.
Yes, please, the ordinary share capital,
Okay, yeah.
the information given, it's like it should be 280. And
280.
on the capital,
But the information given to be
Hello?
what? I can hear you.
280.
Okay.
We have the directors 100 cedis, then 12% debenture 80. So it will be 280. So the 300 cedis you say it should be written down to 300. I don't get it. How is it going to be done?
We have ordinary shares 400 already. Look at the financial statement. We have 400 already. Can you see under equity we
Okay.
have existing of ordinary shares already? So it is the existing one that we are writing down by 300, not the new one.
Okay.
Are you okay?
Okay.
All right.
Okay.
So we are writing this
Thank
one down to 100. Can I move on now?
Yes, thank you.
Okay, you're welcome. Do you have any other non-current assets in the question? Do you have any other non-current assets in the question? I'm sure that is all. The ones that we have is land, building, plants. We have written off the development expenditure and goodwill already, isn't it? So it will be left with land and what? Building, plants, and machinery. So let's count to current assets. Current assets. Current assets will now be the first one is what? Current assets. The first one is inventory, isn't it? Okay. The first one is inventory. The inventory will be, what is the new value of the inventory? What is the new value of the inventory? 162. Okay. 160. Then we have receivables. What is the new value of the receivables? 88. Okay. What will come again? Will bank come here? Will the bank come here? The bank
Yes,
overdraft
it will
is what?
come.
247, isn't it?
Sure.
And they say that the people have converted how much to what? The benches. They have converted 200 to the benches. So it will now be left with 47, isn't it? Do you have any bank transaction happening? The directors should subscribe for a further 200
like-
million. GM.
Yeah, I was to talk on that.
Okay. So that we are owing the bank 247, isn't it? We are owing the bank 247. And the footnote was saying that the bank is to convert 200 million. So out of the 247, they will convert the 200 million to a loan. It will not be a loan. which will be a long-term loan. So it means that we are now be owing the bank 47. And another question says that the directors should subscribe for a further 200 million ordinary shares of this one, each at par to provide the cash needed to complete the what? The reorganization. It means that there will be a cash of 200 coming in. As soon as this 200 comes in, the bank will take the 47 out of it. So you bring the bank here, which will be 200 million minus the overdraft, which is the 47. What will be the figure? What will be the remaining balance?
$153.
150.
153.
Okay. 153. So if you add that, if you add, or what are you getting?
403.
If we add all is 403. 403. And the total asset is what?
764.
764. That is our total assets. Okay. So that is total assets. Let's count to equity and what? Liabilities. Equity and liabilities. Equity and liabilities. The first thing that we are starting with is what? The first one that we are starting with equity, which is ordinary shares. Equity. We start with equity, which is ordinary shares. So ordinary shares, what will happen? What you are going to do, since you are not preparing ordinary shares account, show all the workings here. We have 400 first, isn't it? From the statement, we have 400. Ordinary shares, we have 400 million, isn't it? What happens to the
Yes.
400 million? We write 300 off. So we write 300 off. It will now be left with 100. There were some conventions to ordinary shares during the what? During the year. Let's go and look for those ones. The 12% debenture should be converted into 80 million ordinary shares. So we are going to have 80 million. It will be addition. Let's also come here. The directors should subscribe for further 200. There will be additional 200. So what is the total figure?
380.
380. Okay. Let's see what will come under the ordinary shares. We don't have any preference shares there. We don't have anything there. So the next thing is there won't be any 12% debenture because they have converted their money towards equity shares. The retained earnings has been written off. So the only non-current liability that we are going to have is the portion of the loan that has been converted, the portion of the overdraft that has been converted towards to loan. So non-current liability. Non-current liability. Liabilities is the bank loan, which is 14% bank loan. 14% bank loan. How much was that? The bank loan was how much? The bank overdraft the bank is to convert 200. So the 200 will now be the loan. The bank loan is now 200. Okay. Let's come to current liabilities. Current liabilities. The current liability is, the first one is trade creditors. Okay. Did something happen to their figure?
No.
Nothing happened. So we just take their actual figure there to this side, which is 184. Okay. 184. What is the total figure there?
764.
7.
64.
Okay, 764. Okay, this is all. This is the question 4. I don't know how many marks. This was April 2022. I don't know how many marks is that. Let's look at the next question. Then we move on to our business for today. The next one is provide an assessment of the proposal for the future prospect of the company. So based on what they are saying, what can you say about the company? Are they going to be making a loss in the new business form now, or they will now start making profits? So you just look at these items and try to talk about them. If you are going to talk about them, the analysis should be based on figures. It should be quantitative analysis. All right. So let's look at the scheme now. First, the company was paying what? First, the company was paying 12% what? Interest on the debenture. What should have been that interest? 12% on 80 is how much every year?
9.6. That's it.
9.6 million. But what happens to the debenture? What happens to the
Has been
debenture
used
now?
as a loan.
It has been converted into what?
A loan.
Ordinary shares. So it means that the company will not be paying that interest again, isn't it?
Yes.
So that interest, that part of the interest will be saved. That part of the interest that will go out of profit will be saved. Let's come to another thing that they did again. The bank overdraft is converted towards
Loan.
loan. Though the company will be paying interest, the company will have enough cash to spend because
Long-term loan.
yes, long-term loan. So the company will be given a grace period, a number of maybe a long period to pay, isn't it? But if that money should have been bank overdraft again, it means that as soon as the money hits the company account, the bank will take it. That will put the company will not be having enough cash to run the day-to-day activities. So if they are converting the 200 to long-term loan now, it means that this is going to reduce the pressure on the company's cash flow. Because one thing about bank is that the bank overdraft is that there is no payment plan. As soon as the money hits your account, the bank will take it. But if you have a loan, they will give you a payment plan. Oh, every month this is what you pay. So you can use that payment plan to control, to plan how much you should spend, how much you should not spend. So you can use maybe these two things to do the analysis. The company will be saving 9.6 interest out of the profit. They will not pay it to their debenture holders again, because in the first company they are paying 9.6 as interest on the debenture, which is going to reduce their profits. But since you are converting the debenture now to ordinary shares, it means that you will not pay that 9.6 again. Maybe you just pay a tax on it, you net it off tax, and the remaining portion of the profit will remain. You can decide to declare dividend to these shareholders or not, because that particular thing is of the it depends on the management of the company whether they should declare dividend or not. Nobody's coming to lash you. But if you don't pay interest, it will be there for you to come and pay again. The creditors will be on your neck. So if you are converting this one, it means that the pressure on the profit will reduce. The pressure on the company as to paying of annually interest, whether you pay, it will include you pay, that pressure will reduce. And also converting the bank overdraft to long-term loan is also reducing the pressure that will be on the company's cash. Because with the bank overdraft, as soon as the money hits your account, the bank will take it. But with long-term loan, the bank is going to give you a payment plan that every month pay this, every year pay this, and you can plan according to that. So you can use these two things to speak about the prospect of the company. Do you have any question before we move on to an issue of liquidation? Are we all okay there?
Yes, yes.
Okay, so we can move on. Let's move on to, this is purely capital reorganization. This is purely when the business want to restructure, they want to turn things around and start operating again. What if the business want to say, okay, we are making loss. We don't even know whether we have a prospect or we have a future or not. So what will happen is that let's close down the business. If you are closing down the business, it means that you are going to convert the available assets into cash and use it to pay your what? Your debt or your creditors. So we are going to look at when the company wants to liquidate, what should happen. If you are liquidating, it means that you have to sell your available assets to settle your debt. You have to sell your available asset to settle your debt. So that is all about the liquidation. Liquidation, you sell the assets and use it to settle the debt in a preferential manner. So we are going to look at how do we do with this preferential manner. Some of you can see here, the bank overdraft was secured on what? Fixed assets. So if this bank overdraft was secure on land and building, it means that as soon as you sold the land and building, you have to use the money to pay the what? The bank overdraft. The bank overdraft. So this will be a first priority if you are liquidating. This will be a first priority if you are liquidating. So since you secure this on a fixed asset, the bank can decide to come and take the fixed asset and go. But if you look at these trade creditors, if you don't pay them first, they will not take any action because they are no importance. But you can also have some things like maybe some of the regulatory bodies, SNATE, GRE. Those people, if you don't pay them first, you don't use your available cash to settle them, they can take you to court. So sometimes we look at settling of the debt, we use preferential order, and the question will give you information on that. The question will give you the information on that. So without wasting much time, let's look at how we settle the debts. If we are liquidating, how do we settle it? How do we settle it? Let's look at the steps that you have to follow to settle the debts. Okay, so let's look at the liquidation option. Liquidation option. Usually undertaking a scheme for reorganization, the first option is to look at the, is it like the liquidation? Let me see whether this is, okay, this is the liquidation, this one. So usually in undertaking a scheme of reorganization or reconstruction, the first option is to look at the scenario if the company should undergo voluntary liquidation. This process will be obvious if there are no future prospects. If there are no future prospects. So the company can say, oh, we don't even know whether we are going to make profits. Even if we reorganize, we sack the management and those kind of things, we don't even know whether we are going to make profits. Maybe what they are doing is illegal. Their business activity they are doing is illegal or is of no use. Right now, people are selling computer. You are still selling typewriter. Who is coming to buy? So you can see that your business, you don't have future, you don't have prospects. So if the proceeds to be realized from sale of assets can adequately compensate all stakeholders, then the company may be liquidated with the proceeds distributed to stakeholders. So another case of you trying to liquidate is if, okay, you want to close down business and all the asset that you have, you can sell it and settle all your stakeholders. Shareholders will get all their money. Bondholders will get their money. Creditors will get their money. Okay, why should you be in business again? Let's just close down and settle those people. We are good to go. We demonstrate if the company were to go into liquidation, what the position will be. This is then used as a guide to devising a reorganization scheme. The procedure, let's look at the procedure. Okay. The procedure is as follows. Ascertain the proceeds from sale of assets if the company is to liquidate. So the question will give you information about the market price or the breakup price. It either be a market price or the breakup price, or they can say the following asset will be sold at the following amount. The following amounts. Okay. Distribute the proceeds to stakeholders according to priority of stakeholders' claim. Thus, the order of payment is as follows: to pay debt secured with fixed charge out of the proceeds from sale of the assets. So we look at bank overdraft. It was secured on a fixed asset. They can say this was secured on bank and on building and land, or land and building. So as soon as you sold the land and building, use that proceeds to settle the debt secure on that particular asset. That is what they are saying. If the proceeds fall short of the debt, the deficit becomes unsecured what? Creditors. So let's come to this example. Let's come to this example here. The bank overdrafts. Okay, the bank overdraft was how much? 247, isn't it? And if we are to sell the asset, we are to sell the land and building, how much are we going to sell it? We sell it at 261. Am I correct? Am I correct? Hey. Kevin, are you there, or we are all off?
I'm
Please,
here.
we are
Okay.
Yeah.
I thought that my people they are in the cemetery. So okay, the bank overdraft. Let's assume that it was secured on land and building, which was 247, isn't it? And the land and building will be sold for how much? 161. So we use the 161 as a proceeds to settle part of the 247. How much will be left?
86.
86. So that 86 will become a debt that is not what secured. That is what that particular thing is saying. So after you use the land and building to settle the part that is not yet settled will become unsecured. It will not be secured again. It will be unsecured. All right. That's what the question is saying. Okay. So the next one is to pay liquidation what? Cost. You can't liquidate when you don't pay liquidation cost. If you want to do liquidation, maybe you are going to contract a professionals. Before you have to complete the process, you have to pay the professional. So the next thing to pay is to pay the liquidation cost. Preferential debts, including statutory payments such as staff costs, SNITs, pay VAT, etc., and other payment due to employees. The next one is debts which carry a floating charge. The next one, if you have some money left again, then you pay your unsecured creditors. If after that one you still have some money left, you pay your preference shareholders. If after that there's some money left, you distribute it among your equity holders. So this is the order in which the proceeds from the sale of the assets are being used to settle the debts. The first one is to pay debt secured with what? Fixed charge. The next is to pay liquidation costs. The next is to pay preferential debt or some legal or something that is important to pay, like GRE. You have to pay tax and all those kind of things, pay and those kind of things. If you still have some money after settling this, then that money should be used to pay debts that are carrying what? Floating charge. The interest rate is not fixed. The interest rate is not fixed. That is the floating that they're talking about. If you still have some money left after settling these people, then you now count your creditors. After settling off the creditors, if you still have some money left, you count your preference shareholders. If after settling your preference shareholder, you still have some money left, then you distribute this money among the equity shareholders. If the company will not be liquidated, the scheme of reconstruction to be implemented can be drawn. So after this one, if the company decide that, okay, we cannot liquidate, then you now come with what? A scheme of what? Capital reorganization or reconstruction. So this is how we go about the issue of liquidation. Let's pick a question and we see how we go about that? Let's pick a question, then we see how we go about that. Let's pick a question, then we see how we go about that. Question 2. Let me check whether it's about real this one or okay. Question 2 is about that one. Okay. Okay. So let's come to question 2 is about liquidation issues. Okay. Who is reading for us? Who is reading for us? Amanda, will you do that for us again?
Is it question 2?
Yes, question 2.
Suzuka Limited was incorporated as a private company several years ago. Trading was very profitable until 2009 when the company began making losses due to influx of competitors and the aging plant and machinery. The question disappeared.
Hey, really? Okay.
The board of directors is considering whether to reorganize or liquidate the company. As a consultant, you have been given the latest financial statement of the company as follows. Statement of financial position as at 31st December 2011.
Okay. Let's move on to additional information straightforward. Okay.
Okay, please scroll down.
Okay.
You have been given the following additional information. The company's freehold property was acquired on 31st January 2010. The directors believe that the net disposal value of the freehold property as at 31st December 2011 would be 4 million Ghana cedis. It is estimated that the break-up value of plant, machinery, and motor vehicle as at 31st December 2011 will be 900,000 Ghana cedis. The deferred development expenditure has been pertained.
Okay.
It is estimated that if the company is liquidated, it could be sold for 2 million Ghana cedis.
Okay.
The inventories are estimated to realize their current amount in the event of liquidation.
Okay.
One of the major customers of the company has been declared bankrupt. Suzuka Limited is likely to lose 100,000 Ghana cedis of the amount due from that customer.
Okay.
In the event of Suzuka Limited going into liquidation, it is estimated that liquidation cost will be 42,000 Ghana cedis.
Okay.
Reorganization cost of the company is estimated at 30,000 Ghana cedis. The ordinary shareholders are prepared to introduce additional capital of 3 million Ghana cedis if they consider the proposed scheme to be satisfactory. The bank overdraft limit is 4 million Ghana cedis.
Okay.
It is considered that the proposed reorganization of the company would result in net profit after tax of 1,500,000 in the year ending 31st December 2012 and 2 million or more in each of the years thereafter.
Okay.
Please scroll down a bit. Please scroll down a bit. Preference dividends are 2 years in arrears. Can you scroll down for me?
Okay.
Have you done that? I can't see it here. Or you've done that?
Are you sure?
My end, I can't see it too. I can see only XI. That's preference dividends are 2 years in arrears.
Can you see now?
No, can somebody else see it? Hello, can somebody else see his
Emmanuel,
screen?
can you see?
Yeah,
Can
we
you
can
see?
see
Yes,
it.
we can see it.
Yeah, we
And
can
then please,
So it's your
Please
network.
continue. Please continue from there. Why I stopped at XI. Preference dividends are 2 years in arrears.
The stated capital is made of.
Who is reading? Emmanuel.
The stated capital is made up as follows: ordinary shares 5.73 million, 18% preference shares 3.15 million. Required. Advise the board of directors whether to reorganize or liquidate the company. B. Design a scheme of reorganization that will be acceptable to major stakeholders.
Okay.
C. Prepare a statement of financial position immediately after the reorganization.
Okay. So this one, they are saying that advise the board of directors whether to reorganize or to what? Liquidate. So you are going to look at the two options. If you are liquidating, what will be the side? If you are reorganizing, what is the side? So you can see that they have given you information about whether to liquidate or whether to reorganize. So these are the financial statements. So we are saying that if you are embarking on liquidation exercise, it means that you are going to sell off the existing asset to pay your what? Your existing debt, isn't it? All right. So let's look at the liquidation side first. Let's look at the liquidation side first. Let's look at the liquidation side first. All right. So let's look at liquidation option. Liquidation options. Liquidation options. So if you are liquidating, the first thing that you do is what? You convert your existing assets to what? Existing asset to what? Cash, isn't it? So the question gave us some information on the assets. So proceeds from sale of our assets. Proceeds from sale of assets. So you use the proceeds to settle the existing ones, existing debts. So let's look at the question now. Let's look at the additional information. The company's freehold property was acquired on 31 January 2019. The directors believe that the net disposable value of the freehold property at 31/12/2011 will be what? 400 million. So if you want to sell, if you are going into liquidation, it means that we are going to sell the freehold property for how much? For how much? 4 million. So let's put 3 zeros at the top. So if you are selling, then you have a 4,000 proceeds. What will be the next one? What will be the next one? It is estimated that the breakup value of plant, machinery, and motor vehicle at 31 December 2011 will be what? 900,000. What is the meaning of breakup value?
Market value.
That means if you want to sell today, that is a disposable value, which is 900,000. So other assets will be sold for what? How much? Other assets will be sold for 900,000, which is 900. Let's move on. Let's move on. The deferred development expenditure has been what? Pented. It is estimated that if the company is liquidated, it could be sold for what? 2 million. So if you are liquidating today, how much are we going to sell the development expenditure?
2 million.
So we have development proceeds from the sale of development expenditure. 2 million. So we have 2 million here. So for liquidation, what you do is that what are those assets that you are selling? Just bring them. Bring the amount that you are selling them. Bring the amount that you are selling them. Okay. The next one is just the next one is what? The inventories are estimated to realize their carrying value in the event of what? Liquidation. So if we are liquidating, what are we going to do? We will sell the inventory at the existing amount that they are now. What is the amount that? What is the value for them now?
2020.
2020. Okay. So inventory will be sold at the same amounts. Inventories 2020. Can we move on? Okay. Okay. In the event of, okay, one of the major customers of the company has been declared bankrupt. Suzuka Limited is likely to lose 100,000 of the amount due from that customer. So what is the amount that we have for the customer? What is the amount that we have for the customer? What is the amount? What is the amount that they are owing us?
100,000.
The total amount that they are owing us is what? 760.
760.
Okay.
Yeah.
But they are saying that out of this 100,000 will not be what? Taken. So if we are liquidating today, how much are we going to take from the customers?
660.
660.
660. So we have three trade receivables. 660. I hope we are following, isn't it? Right. Let's come to the additional information. In the event of Suzuka Limited going into liquidation, it is estimated that liquidation cost will be what? 42,000. But what we do is that we now find our total revenue, which is the amount that we are going to realize from our assets before we subtract the expense. So let's keep the liquidation cost there. It will be paid out of the amount that we are going to have. Reorganization cost of the company is estimated at what? 30,000. We are only going to incur this cost if we decide to reorganize, isn't it? So this has nothing to do with the amount that we are going to pay out of the money we receive when we want to liquidate. So this is an item for reorganization. Okay. The ordinary shareholders are prepared to introduce additional capital if the company considers the scheme to be satisfactory. It has nothing to do with liquidation. If we are liquidating, there won't be any ordinary shareholder, there won't be any company. Nobody is going to introduce additional capital. So this will only be for reorganization. If the company wants to reorganize, that is the only way that they can introduce additional shares. The company will only be in existence before they will buy another shares or they will introduce additional capital to the company. A bank overdraft limit is what? 4 million. The bank overdraft limit is what? 4 million. Let's look at the bank overdraft figure. What is the figure for the bank overdraft? What is the bank overdraft?
2,100.
It's 2,100, isn't it? So, but are we keeping 3 zeros at the top?
Yes.
Okay, so that would be 2,100,000, isn't it? So the bank overdraft limit is what? 4 million. Have you exceeded the limit?
No.
No, but that is a floating charge, so they will not be a priority when we are paying them. Okay. The only thing is, if the company wants to borrow more, they can only borrow up to what? 4 million. The bank can only give them overdrafts up to what? 4 million. That is what they are saying. It is considered that the proposed reorganization of the company will result in net profit after. Forget about this time because we are not reorganizing. We are assuming that we are going to liquidate. So these issues, these particular things are not important to us. The preference dividends are 2 years in what? In arrears. 2 years in arrears. So if you have money, we have to pay the preference dividends. We have to pay them. We have to pay them. Let's come. Do you have any issue about the preference dividends here? We don't have any issue. It's not even in the account. It's not even in the account. It's not even in the account. Okay. What again? The stated capital is made up as follows. The stated capital is made up as follows. Okay. So what is the total amount of money that we are going to realize from the sale? If you want to liquidate, what is the total amount of money that we are going to take?
$9,580.
So that is the total process. Total process. Total process. Okay, what are we going to do now? We subtract expenses, isn't it? Or cost. Or we just say distribution. Just write distribution here. Let's do the expensive stuff. What are those things that we are going to pay out of this? The first expense that we are going to pay is what? Liquidation what? Do you have any assets secure? Do you have any debt secure on assets? Okay. So the 20% debenture is secure on what? The 20% debenture is on freehold property. How much are we selling the freehold property?
4,000.
So it means that we can pay and we still be having some money left, isn't it? So 20%, 20% debenture will be the proceeds that we are going to get from. This will be used to pay that one. So the proceeds from that one is 4 million, but we are owing them 3.8 million. So we can still pay all the amount for them and still have a balance. So the first distribution that will be made is 3.8. So if the asset on which the debt is being secured, if the proceeds from that asset can pay all the amount of the debt, just pay all. But if this place should have been 3,000, it means that we only pay 3,000 out of it and we take the 800. Are we okay? Because the 4,000 can settle all the 3,800, that is why we are paying all the 3,800. But if we cannot settle, we just pay the portion that we can realize and send the rest as unsecured words. Debt. Okay. The next one is, let's see whether we have any one again. Okay. The bank overdraft is a floating charge. So the next one that we have to settle is what? Liquidation cost, isn't it? Liquidation cost. The next one that we have to settle is liquidation cost, which is, how much is the liquidation cost? Liquidation cost is 42,000. So that will be 42. We are keeping 2 zeros. Do you have any other thing that is of importance to us? Reorganization, the ordinary share, institutional development expenditure, the vector value, one of the customer of the company. In the event of super going into liquidation, this is with the liquidation cost will be 42. Reorganization for the shares. Okay. So let's subtract this from our proceeds that we have. Let's subtract this from the proceeds that we have. What will be the balance left? It will be this minus this minus this. That will be the available balance for distribution now. Okay. What are the scheme says? After paying your debt secure on fixed assets and liquidation costs, what will be the next thing that we have to pay? What is the next thing that we have to pay?
Ask your creditors.
Do you have any preferential debt? The first one is to pay the secure with fees charge out of the proceeds. We have done that already. We have paid the liquidation cost already. Do you have any preferential debt in the question? Do you have any preferential debts? Do you have any people that we have to pay them at all costs? I'm not sure that we have anything like that. We don't have. Yeah, Jim.
Please, the liquidation cost, assuming the proceeds from assets was not much to cover the 20% debenture.
Okay.
Or it could also cater for only the debenture, but the liquidation cost wouldn't have met it. For we to consider the other proceeds, or
yes, we consider the other proceeds. This is the total proceeds. For the assets, we only use the proceeds from the assets against which the debt is being secured to settle the debt. But for other costs there, you can use other proceeds to settle it. But for this 20% debenture, we only use the proceeds from the asset that we take the debenture for, which is the 4,000. So if this is 3,000, you can still pay the liquidation cost using maybe proceeds from other assets or the development expenditure, the proceeds and other things to settle it.
Thank you.
All right. Okay. So the available balance now is 5,738. So let's look at how they say we should pay this. If you are doing liquidation, we go according to the recommendation that the scheme says. So if we don't have any preferential debts, we ignore that one. Debt with carrying a floating what charge. Let's see whether we have debt carrying what? A floating charge. Let's look at debt carrying a floating charge, whether we have a debt like that. Shit, I'm going to.
Bank overdraft.
We have bank overdraft there. Okay, that is very nice. So bank overdraft is how much? 2,100. We can pay all, right? The figure left can pay all. Okay. The figure left can pay all. So if you like, you can just write the bank overdraft here. Don't just stand up and be subtracting. If you subtract one, see, look, calculate the proceeds left. If the proceeds left can settle the remaining one, then bring it. Since this one can settle our bank overdraft, we ignore this and just bring the bank overdraft. What is the bank overdraft figure? 2,100, isn't it? After so after settling it, what are we going to have? We calculate it and see whether that can also help us to settle another thing that we have to settle. Okay, we still have a process of 3,638. What are we going to do? What will be the next thing that we settle? What will be the next thing that we settle?
Unsecured creditors.
Okay, so the question is, let's go and check the amount that we are owing the creditors and see whether we can settle all of them. Account payable is how much?
3,200.
3,200. Can the available this thing settle all?
Yes.
So we can come and put trade payables here. Trade payables here. 3,200.
200.
Let's see whether what will be the balance that we are going to have from the process. What will be the balance left? We are having 438, isn't it?
Yeah.
Okay. The unsecured creditors, we still have accruals. Accruals is also, we are owing some creditors, which is, they are also unsecured. So what will be the next thing that we pay? Can that one pay all?
No.
So what are we going to pay? We just pay part and leave the rest, isn't it?
Yes, yes.
So accruals, let's pay the accruals. You can only pay them what? 438. So at the end of the day, the total expenditure will be the same as the process. So we have 0 left. We have 0 left. What will be left is 0. You can't pay anything again. So you can see that the shareholders will not be taking anything. The preference shareholders will not be taking anything, and the ordinary shareholders will not be taking anything because there won't be any money left that we can use to discharge to them. So we have set it up to unsecured creditors. So if we should have settled all the unsecured creditors and we still have some balance left, then we give it to, if we can pay all the preference shareholders, we pay all. Then the remaining balance will be given to the equity shareholders. But the process can only pay up to unsecured creditors. The preference shareholders and the equity shareholders will go to the house with nothing. Do you think they are going to support the position of liquidation? Will the preference shareholders and equity shareholders going to support the position of liquidating?
No, they won't.
Why?
Because they will lose their investment.
So which option are they going to support?
Reorganization.
Okay. Okay. So sometimes the position of the liquidation will tell you whether the preference shareholders or the equity shareholders are going to support the liquidation option or they will support reorganization. But if at the end of the day they are not getting anything, automatically they will kick against what? The liquidation option. So this is the option if they are liquidating. This is how we share the money. This is how we share the money. Do you have any question before we look at reorganization? Because they are going to kick off against the what? The liquidation. They are not going to get anything. They will lose their investment. They will go to the house with nothing. Are we okay with the liquidation option? Are we okay with the calculation? Are we okay? My people
Yes,
are,
please.
okay. So we can move on to, so since they won't support the liquidation, the next option will be what? Reorganization, isn't it? So let's now prepare the capital reduction accounts. Capital reduction accounts. But if they should be going to the house with something, then you won't even bother to do reorganization again. The company will just liquidate and that is the end. All right. So let's look at capital reorganization. Capital re. Okay. 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 Isaac, you have a point. Okay, you have a point. All right. That is very nice. So
So a question is
yes.
it seems I'm a little bit confused here. So at this point, after preparing the liquidation process, and do you have to go ahead, or how do you determine that okay, you have to reorganize? In
Yeah.
that case,
If
you have to do
if the shareholders are not getting anything, then they will kick off against that one. Then you come for the capital you come for reorganization option. But if you have done the liquidation option and you realize that the shareholders will get something to the house, then
okay.
you just ignore
There's no
the what? Yes.
reorganization.
All right. Please,
All
Lionel,
right.
with respect to the unsecured debt, can we add them and share the remaining proceeds to them with respect to their ratio? Okay. Okay. Isaac, yes, you can do that. You can do that. You can do that. Okay. Mostly what happens is that after paying the overdraft, what will be the balance left? After paying the overdraft, what will be the balance left? After paying the overdraft, the balance that will be left will be
80.
3638, isn't it?
Yes, 80.
3680. After settling the overdraft,
Yeah.
it
So
will
that
be
way three,
it will be
200.
no, we are paying 38. It will be 3638, isn't it? All right. Mostly 38. 3,200 plus 438. That will be the balance left after paying the overdrafts. Mostly what we do is that you see that what I've done over here is that I've placed the trade payables before the accruals. Meanwhile, all of them they are unsecured what? Creditors. So what we normally do is that we don't want any of them to be disadvantaged. So the available balance left, we try to share it among their in the ratio of the amounts that we are owing them. So let's count to the amount that we are owing them. Let's count to the amount that we are owing them. Charlie, thank you for reminding me with that. Okay. What is the total amount that we are owing the account payable and this one? Is 3,800, isn't it? Is it 3,800? The amount that we are owing the accounts payable and accruals together is it 3,800?
Yes, please.
Yes,
So
please.
what we normally do is that the remaining proceeds will be shared in that ratio that we are owing them. 3,200 is to 600. So we share that. So the trade payables will be taking 3,200 over 3,800 times the remaining process. That is multiplied by 3638. How much are we getting? $3,200 over 3,800 times 3638. One person will be getting 30.64, and the other person will be getting 3638. Okay. So that is what we normally do for the unsecured creditors. The process left. If you don't want to disadvantage any of them, if you don't want to show any issue of favoritism or anything, just share the remaining proceeds to them in the ratio of their value or the amount that you are owing them. And that is what I've done over here.
Abdullah, our class one.
Water.
Okay. So that's Isaac, thank you. Thank you for that's what we normally do. Thank you very much. Thank you. That's what we normally do. But if you do it like that, nobody's going to lash you. Just that you are treating some people, you are trying to be fair to some people and be unfair to some people. Okay. Let's come to capital reorganization side. Capital reorganization side. If we are reorganizing, what will happen? If we are reorganizing, are we going to receive some gain and some loss? Let's see. If you are reorganizing, what will be the first thing that we do? We write off all the goodwill, isn't it? We write off all the goodwill. So we don't have any goodwill there. But if we are okay, if we are reorganizing, what are some of the things that we are going to do? We are not selling the freehold property, so it will still be carried at the same value. The plants, machinery, and motor vehicle, we are not selling them. We are not revaluing them too. So they all be carried at the same value. Deferred development expenditure will also be carried at the same value. But what will happen to the current assets? Inventories will also be carried at the same value. But what will happen to the receivables? What did they say about the receivables? They say one of the major customers of the company has been declared what?
Bankrupt.
So what will happen? That 100,000, are we going to take it? Are we going to take that portion of the 100,000? Are we going to take the 100,000 from them? Are we going to receive the 100,000? Are we still going to receive the 100,000 even if we are reorganizing? We are still going to be in operation. Are we going to receive the 100,000 from them? Those customers, one of the customer of the company has been declared bankrupt. Suzuka Limited is likely to lose 100,000 of the amount due from that customer. Even if we are reorganizing, are we going to receive the 100,000?
No, it's bad debt.
So
No,
what?
bad debt.
So that would be what?
Bad debt.
So that would be
Bad debt.
of what? 100,000, isn't it?
Yeah.
And that will be expense to us. So that will come to the reorganization account. Reorganization account is prepared like the way we know how it is prepared. Okay, the first figure that will give us is the bad debts. In the event of going into liquidation, it is estimated that liquidation cost. If we are reorganizing, are we going to incur liquidation cost?
Oh.
Which cost are we going to incur?
Reorganization.
Reorganization.
Okay. Expense or income?
It's an expense.
Expense.
So reorganization what? Cost. That will give us 30. Okay. Okay. The shareholders are prepared to introduce additional capital of this one. This one has nothing to do with reorganization. It's not bring any gain or loss. The bank overdraft limit is 400 million. That one is no problem. It is considered that proposed reorganization of the company will result in a net profit after tax of this one. This is after reorganization. The preferred dividends are 2 years in arrears. There is nothing like that. They are not saying we should convert it to this one. The stated capital is made up as follows. The stated capital is made up as follows. Okay. The company freehold property was acquired on this. The director believed that the net disposable value of the freehold property on this date will be what? 4 million. Net disposable. Are we selling? Are we selling the freehold property? Are we selling the freehold property? So it means that we will not do anything about it, isn't it? We are not going to do anything about it. So what will happen? So if we are reorganizing, are we still going to be having the income surplus?
No, sir.
What will happen? We write it off, isn't it?
Yes.
So we write it off, and that will give us income surplus. What is the figure there? It's 9090. This one. Okay. 7340. Okay. You can see that we are not making any gain, isn't it? We are not making any gain. So what will happen? This is the things that we are going to incur when we are reorganizing. You can see that we are not making any gain. So how do we balance the capital reduction accounts now? How do we balance it? How do we balance it? Kevia, how are we going to balance it? You can see that the credit side is more than the debit side, isn't it?
Yes, please.
So what do we do? What do we do to balance it? Who is going to take the loss? Whose figure are we going to write down? Is it going to be equity shareholders or preference shareholders?
Equity.
Equity shareholders. So the difference will be written against the what? The equity holders figure. And that will be 74770. So we have ordinary shares. Ordinary shares to be 7470. 7470. Okay. Let's count to the equity shares. Do they even have the money to have that? Do they even have the money for us to write off that value of the figure there? Do they have the money to write off that figure? Okay. What is the value of the ordinary shares? What is the value of the ordinary shares?
5.73.
5.73 million. If you are, so how much are we writing against their figure? That is 7 million. Or the figure that we are writing or against their this thing is what?
7470.
So if you are writing, someone is having 5 million. Someone is having 5 million. Someone is having 5 million. Now you are writing 7 million. It means that they will pay additional money for them to start in the, for them to stay in the business, they have to pay additional capital, isn't it? That is why the question
Yeah.
say they are ready to introduce what? Additional what? 3 million. They are ready to introduce additional what? 3 million. They are ready to introduce additional 3 million. They are ready to introduce additional 3 million. They are ready to introduce additional 3 million. So let's look at if they are reorganizing, what will happen. The ordinary shares that we have is what? 5-3. The ordinary shares that they have, the existing ordinary shares is what? 50. If you are multiplying,
573.
It's 5-3.
it's 5-3, 7-3. So if you multiply by 3 zeros, how much are we having? 5730, isn't it?
Yes, please.
So if they introduce additional 3 million, what will be their total ordinary shares? So ordinary shares will be, ordinary shares will now be, so the balance brought down is what?
This one is a 527.
Look at the down of the footnotes.
5.73.
Yes, we are keeping 3 zeros, so multiply by 1,000.
So
5730.
5730.
So they will bring additional cash, isn't it? Of 3 million. That is what the footnote is saying.
Yes.
But how much are we writing off?
A writing of 7470.
Okay. So what will be the remaining balance for them now? We are writing off 7470. What will be the value for the ordinary shares now? Balance carry down.
1260.
1260.
0.
So that will be the balance that we'll be seeing in the statement of financial position. Are we okay there? All right. Let's go ahead and prepare the statement of financial position. Statement of financial position. So what scheme? What is the next question? Advise the board whether to, okay. So right now we have done the two. Are you going to advise them to liquidate or they should reorganize?
Reorganize.
They should reorganize. Why are you saying that?
Because with the reorganization, there will be money for the ordinary shareholders.
Okay, and
But
they also
then
say that
with
the
the
company,
liquidation,
okay. With the
but for the
liquidation, what will happen?
liquidation, they will lose all their investments.
And the preference shareholders will also lose their investment.
Also
isn't it?
lose their investments. Yes,
Okay.
please.
But since they say it is considered that the proposed reorganization of the company will result in net profit after tax of this one and even more. So it means that after the reorganization, the company has some prospects. And if they are making profit after tax of this one, it means that the company can pay dividends to the ordinary shareholders. So if they should reorganize, maybe in the future they will enjoy. But if they should liquidate today, it means that they won't lose anything and the company will not be in operation again. Are you okay? So after reorganization, they say the company can now be making profit. If the company is making profit, they are making profit for the owners. So it means that the owners will be getting their dividend, their return, and everything. Although they will inject additional capital, but that does not change the fact that at the end of the day, they will still be getting their return. But you see that, Charlie, this scheme is not easy. You see that if they should liquidate, how much are they losing? They are losing 5.73, isn't it?
5.73.
But
Yes.
if they reorganize, how much are they losing? If they reorganize, how much are they losing? They are losing 7470, isn't it?
Yeah.
So it's not easy. How we could do them, but they should reorganize. They should reorganize because of the profits that the company will be making. They can try to capitalize their reserves to. They can convert their reserves to ordinary shares so that you have more ordinary shares in the company. And that also will tell you that the company will be financed through debt than what? Equity. Because the ordinary shares that we have in the company is 1260. But look at the preference shares that we have. Preference shares will be 3.15. And we are going to have a debenture also. The debenture is what? 3,800. You see that the debt structure, the financial structure of the company is shaking. The debt to equity ratio will be very high. And that is also a pressure on the company. But at the end of the day, the equity shareholders will be willing to what? To liquidate. But the preference shareholders will not be willing because they will be disadvantaged. But if they should reorganize, the equity shareholders will be disadvantaged, whilst the preference shareholders will be enjoying. But at the end of the day, the scheme should not disadvantage anybody. The scheme should be fair. So I also support that they should reorganize. Since the company has a prospect, they should reorganize. They should reorganize. So if they say you should advise, these are the things that you have to touch on. If they are liquidating, what is the option? What will be the side effects? If they are reorganizing, who is going to lose? Who is going to gain? At the end of the day, none of the people should be what? Disadvantaged. Are we okay there? All right. Let's look at the statement of financial position. Statement of financial position. So we come with the non-current assets. Non-current assets. Non-current asset. The first one is what? The first non-current asset is what? Freehold property. What is the figure? The freehold property is how much? Is it 3930? 3920. The next one is plants and what? Machinery and motor vehicles. That is 1050. That will give us 1050. The next one is deferred development expenditure. Deferred development expenditure. That is how much? $34.0. What is the total assets? What is the total non-current assets? What will be the total non-current assets?
8460.
84. Kevia, is that you?
80. Yes, please.
So you over here, you are just press calculator. You are here to press calculator. I hope you have my calculator. My calculator is in such a way that if you have it, you know all the standards already. Then we have inventory. Inventory is how much? Inventory is how much? 2020. We have trade receivables. Trade receivable, how much are we going to be having? Is it a 760 or 660?
660.
So we have the amount that people are owing us, which is 760 minus 100. So we'll be having 660. 660. Okay. Are we going to have something again? We have bank overdraft 2,100. But the new shareholders is going to inject additional capital of what? 3 million, which we assume that will be by bank. So if you pay this money to the bank, what will happen? The bank will automatically take the what? The overdraft, isn't it? So if you pay the money to the bank will automatically take the overdraft, which is the overdraft amount is what?
1,100.
So if you are paying 3 million, it means that the company will now be having a balance of what?
900. 900.
So we have a positive bank balance, which is 3 million minus the overdraft. Are we okay with that? Okay.
Yes.
900. So what will be the figure? Total assets. So the next one is equity. Let's just say equity, not equity and liabilities again. Let's just say equity. So ordinary share will be how much? How much are we going to be having for ordinary share now? Ordinary shares will be how much? How much are we having?
1260.
1260. What will be for preference shares?
3150.
3150. Okay. So what will be their total? Okay, let's leave the total. Let's count to non-current liabilities. The first one is what? Non-current liabilities. The first item is what? It's this secured on. So what is the figure for this one? Is it 3,800? Okay. We don't have any. Then we come to current liabilities. Current liabilities. First current liability is we don't have any bank overdraft. Then we have account payable. Account payable. What is the value for the account payable? It's 3,200.
3,200.
Okay. The next one is accruals. Accruals. Accruals is how much?
600.
600. Okay. Do you have any item again? We have written off the income surplus. We have this one. There is no item again. There is no item again. So what will be our total? This plus this plus this. Shit. JM,
Please, there are the cash the shareholders brought in, won't it affect their shares?
yeah, I'm sure I've done that working. I'm sure. Let me Yes, I've done the working over there. I mean, they brought, this is the working. They brought the 3 million. I've added it to the one that they have already. Then we subtracted the amounts that we're written off.
Okay.
And
Thank you. I believe-
maybe we have quoted some figures wrong. There is a difference there. 1240 plus minus 1210.
Difference 30.
There's a 30 of difference. So that 30 might be coming from one figure that we didn't go 12. Let's take this one again. 393430. If you have time, can you add the trial balance in there? The financial statements of the question itself. Try to add and see whether they are correct. 3920 1050. Let me do this myself. Oh, sorry. The difference is the 30, the reorganization cost. We have to pay it through bank.
Yes.
The reorganization cost must be paid through bank. That is the difference. Sorry. Sorry. It's not easy. Sorry, thank you. My mind is not even on it. So this will now be 870. Okay. Okay, then we are now okay. All right. Thank you. Man is tired. Isaac, thank you. That one did not come into my mind. JM, your hand is up.
Hey,
Or maybe it was the first
sorry, I
one.
don't.
Okay. But the thing is, are we okay with the reorganization, the liquidation? Are we okay? Can we do something tomorrow in the evening?
Please, what time?
Yes, please.
Or maybe the same time. Like let's come and solve
Or
additional.
maybe
Let's come and solve additional question on the liquidation. So that next week maybe we start business valuation.
Okay.
Or what do we think?
Okay.
Okay.
We are okay.
Yeah.
Yes, please.
Okay. Okay. So maybe let's just come and solve one question. But I hope everything is clear with the liquidation side.
Mm.
Okay.
Please, I want to ask a question.
Okay.
Okay. I just when we finish the liquidation, the capital reduction account,
Yeah.
all of them, the ordinary shares we're going to lose. So,
Yeah.
for example, if your answer, instead of saying that it's supposed to be capital reduction, you say that maybe they should liquidate, but then you have a tangible explanation to that. Will it be correct?
Yourself, are you going to mark the person right? I mean, you are writing exam, so since you are making sense, the thing is the answer, this thing is objective. They say advice. So advice that you think that is right, you give based on reasons. Are you getting it? So if your reason, that's why I'm saying that if you see that looking at the capital reduction, you see that the equity shareholders will be losing more, isn't it?
Yes, please.
So with that one, they can also say, okay, since the liquidation, the preference shareholders and ourselves, we are going to lose, they can go for the liquidation option. So someone can say they should liquidate because the two people will lose. But if you are reorganizing, the equity shareholders are going to be disadvantaged. So based on that, they should liquidate. And also, if they are reorganizing, you see that the capital structure of the company will be shaken. The company will be highly jet because they have more debt than equity. They have more debt than equity. So you can say they should liquidate. Someone can also say they should reorganize. There's no correct answer. It depends on where you're coming from. Are you okay?
Okay.
Okay, Arimeyao.
Yes, sir. For exam purpose, if the question is saying that we should advise directors as whether to liquidate or reorganize, it means we have to work for both options. You
Yes.
liquidate and work for the reorganization at the same time. Then you will now propound your judgment as whether to reorganize or to liquidate.
Exactly.
Okay.
Okay.
But the question that she was asking is, after we have done all those things, and you say that they should liquidate, are they going to mark her correct or something? And I'm saying that, oh, it depends on where you are coming from. It depends on where you are coming from. But this one too, you can say the question also say that you should prepare financial statements after reconstruction. So maybe the question itself is suggesting that the option should be what? Reconstruction. Are we okay? But you can still go ahead and advise that they should liquidate. Okay. You see the capital reduction, the capital reduction cost that we write off against the equity shares. Maybe the preference shares can also decide to take some parts. That one, it depends. That one is, it all has to do with understanding. They can also, but don't go and say if in practice, management can go and talk to the two parties and they will share it among them. But for examination's sake, write everything to equity shares. Are you okay? All right. So this is all about the liquidation. This is all about the liquidation. If we don't have any other question, then we call it a night and we do something tomorrow. Maybe you try to solve additional 2 questions because this night we have solved 2 questions. So we try to solve additional 2 questions. Then we are good to go. We are good to go.
Please.
The one we solved there is it question 2.
Yes, question 2.
Okay. Yeah, okay. Kevin, you can ask a
It's
question.
concerning the schedule of the liquidation option. If, for instance, you mix in paying the liquidation cost before the preferential debt, you rather pay the preferential debt before the liquidation cost. Meaning, what does it mean? What you've done is wrong.
No, if
But
only
it's
the
still
amount,
end in the same.
if the amount that is left for you to pay the liquidation, the preferential debt or the liquidation cost can still pay all the costs, it doesn't matter how you arrange it.
Okay.
But if you pay the preferential debts and the amount left cannot pay all the liquidation costs, then they will mark you wrong because you can't liquidate when you don't pay the professionals. But if you after paying the preferential debts, the amount left, you can pay the full of the liquidation cost. No, it doesn't matter that you should bring the liquidation cost before that one. It doesn't matter. Are you okay?
Yes.
Okay. All right. Do you have any other question? Do you have any other question or we should call it a night?
Please, when you are done saving, I want to see your Excel worksheet.
If I'm done with what?
Save it.
Uh-huh.
Save it. I want to see the.
Oh, I will send it to the page, so don't worry.
Okay, thank you.
So if we don't have any other matters, I put it before the board that we should end this meeting. Do I have any seconder there?
I second.
Okay, since I have a lady, we can now go. So we call it a night and we continue tomorrow. We go again tomorrow. Thank you all for coming.
Thank you, too.
All right.
Bye.